What's up, guys? Today we're going to be talking about one of the latest real yield protocols on Arbitrum. This project was originally deployed on Polygon, but is now also on Arbitrum. And if you look at these stats, they are nuts and ham. If you guys haven't guessed it already, it's Gains Network. And if you take a look into this, the daily volume on Arbitrum just surpassed the total on Polygon. In just a matter of weeks, it was able to do this. As you can see, as of late, a majority of the volume is on Arbitrum. And if you look back on the 19th and the 20th, it's been over 50% and 61% respectively. So let's go and give you guys a quick TLDR on Gains Network. So Gains Network allows you to trade stocks, commodities, Forex, as well as crypto. So this allows you to trade a little bit of everything with up to 1000x leverage. The 1000x is for Forex. Me personally, I don't recommend leverage, so don't mess with it. But what I do like is that you can trade stocks on this protocol. You can literally trade Amazon, AMD, you can trade Walmart, you can trade Meta, you can trade a bunch of different stocks as well as some crypto assets, and you can even trade stock indexes like the QQQ. And like I told you, you can even trade Forex. So if you wanted to trade the euro, the yen, the British pound, you can do all that on this platform. So as you can see here, just selecting like the British pound, you can do up to 1000x leverage, but this does vary based on the asset. So for example, with Bitcoin, you can trade only up to 150x leverage. And if you select another asset, let's say for example, Airbnb, you can trade up to 30x leverage. So it's pretty self-explanatory how this would work. If I wanted to trade on this platform, I would select either long or short, and I can select either a market or limit order. The stop loss is if you're already in the position, and it would sell out of the position. That way, if there's a cascading event, you aren't wrecked. So with a market order, you're basically going to buy the price at that particular market time. So if it randomly goes way up, at that second you click the button, well, you're going to buy it at that price. So I always recommend using limit orders. Limit orders allow you to select the price that you want to buy it at. That way you don't end up buying into a wick like this and just being wicked down. So at this point, I would select the desired amount of leverage, which I would say to do none, but at this point, the minimum you can do is only 2x. You would select the amount of leverage, and then you would pick your stop loss. So let's say, for example, you want to be stopped out at 25%, 10%, 50%, whatever you select. This is just so you don't get liquidated and lose all of your collateral position. So if I wanted to do 2x and say, hey, look, I want to open up a position on this and I'm going to use $1,000 worth of collateral for this. This is the amount of DAI that I would deposit. I would be depositing $1,000 as collateral, and I would be taking on a position that is worth 2,000 because that's 2x leverage. So if I wanted to get a full Bitcoin worth, or at least exposure to one full Bitcoin worth, I would deposit 11,300 at time of recording. So that means at 2x leverage, my position side would be 22,600 with a liquidation price of, which is going to need to be an extreme wick in order to get liquidated, but hey, it is what it is. Now, a couple of other things you need to notice on here. You can also select your take profit points, so it'll automatically take profit for you. This is extremely important. Why? Because a lot of people, including me, let it ride all the way up and then don't take profits. So you can select 100, 300%, or 900%. The reason why they have 900% because in the docs, that is the most that you can make using the Gains platform. So something to keep in mind when you're using this. So your upside is theoretically capped, and that goes to protect the protocol itself. However, if you wanted to play as the house and take advantage of this, you can through their earn vaults. Now, these vaults, they have a couple of different ones. The first one is the GDAI vault. This is for depositing the DAI token. This is basically behind the protocol, and this is basically what is being used as payouts or rewards. This is basically going to be the counterparty to the traders. So as traders are profitable, this GDAI vault is going to lose. However, if traders are in the loss, then the GDAI vault wins, which statistically traders most likely lose. And that's just how it is because it's weighed against them. Because first they open up the position, they tend to overtrade, get emotional, and they also have fees on top of that. So whether the trade stays the same or goes against the trader, they're losing. Now, the second vault you can deposit into is the GNS pool. This is the governance token for the protocol, as well as the revenue share. So staking in this pool will allow you to earn a staking reward. So currently it's about 7.87% on Polygon and about 10% on Arbitrum. And this is coming from the trading volume, the trading fees, and the platform in general. GNS as a token itself is actually deflationary. So before we get into more details on these different vaults, I want to go over GDAI and explain a little more how this works. So currently the GDAI price is at $1 and 1.015 cents. The reason for that is it's basically a auto compounding token that as the rewards are deposited into the pool, as traders lose, the GDAI token gains in value. So we got Trader Turkey here. He wins in a trade. Well, this means the winnings are taken from the vault. Now, let's say the turkey loses in the trade. His collateral is given to the GDAI stakers, and again, statistically, most of the time traders lose. And here is a chart just showing the breakdown on it. Basically, since inception, traders are at a loss of like nuts and ham really bad. As you can see here, it's almost $5 million. So inside the GDAI vault, you have a couple of things. Deposits, they can go in at any time. So the average staking reward for this GDAI vault is around 24% currently. And this varies based on the trading and the volume on the platform. Not a one-all be-all though when you deposit into the vault. They can go in at any time, but to withdraw, you must make the request and you have to wait a cooldown period. This is between 1 to 3 epochs, and then you must withdraw within a 48-hour window. If not, you'll just have to make the request again and do it all over again. So the reason for the cooldown period is so people don't game the system and basically drain the GDAI vault, depositing and withdrawing in between profit and loss settlement periods. Some summary notes on GDAI. If traders win, the vault loses. If traders lose, the vault wins. Statistically, traders lose more than they win. So depositing into the GDAI vault is basically betting that the traders are going to lose, which, as we showed you, the trend is your friend until the end. It's literally just going down. It's the same thing with other protocols like GMX. So let's talk a little bit about this GNS token. This is actually somewhat deflationary. The original supply was at 38.5 million with a max supply of 100 million. Currently, the supply is around 30.3 million. What happened? Well, it was deflationary. In order for the GNS token to be deflationary, that GDAI peg has to be over collateralized at a certain point. And how that happens is as more traders lose, more is deposited into the vault and it becomes over collateralized. The protocol tries to keep the DAI vault at a certain collateralization ratio, and anything over that is used to buy back the GNS token and burn it. So currently, again, there's only 30.3 million tokens in circulation, with a current inflation rate of about 2% every single year, which for a crypto asset and assets in general, that's a really low rate. Not financial advice, of course. So the GNS token can be used for a couple of things. First, it's used for governance. Second, it's used as the backstop for traders winning on GTrade. So if someone is in a massive win, well then GNS will need to be minted to recollateralize the GDAI vault. A couple of things to note with this. As I showed you on the platform, 900% is the max profit on a trade. So it's not like the upside is infinite for someone trading with this platform. And the max inflation for GNS any year is 18.25%. So it will never go more than that. So here's a quick snapshot of the limitations. First, there's only 3 open trades per wallet. Second, the maximum open interest per pair. Second is the maximum open interest for a certain pair and the maximum open collateral per asset class. This is capped at $75,000. And lastly, like I mentioned to you guys, the max someone can win is 900% on a trade. Now, it doesn't all end there. They even have these sweet NFTs on OpenSea that I can't seem to pull up because my internet stinks. So these are really sweet. But you can see here the floor price is extremely pricey on some of these NFTs. This is the top 5 or the number 5 one. This is basically the best NFT and there's only 90 of them. The reason why it's trading at that floor price is because the utility and the value it brings. As you can see here, you basically get a boost on the LP as well as the vaults. You get 13% boost and you get a 35% spread reduction. So that means your fees are also reduced using this NFT and just staking with it. So the NFTs reduce your fees as well as provide boosted rewards on these different vaults. So it's a utility NFT. And if there is an active trader and they want the cheapest fees, they would use that NFT. Speaking of fees, this is a breakdown of the different fees. These do vary based on the asset class. So you do have cryptocurrencies at around 0.8% or 0.08%. You have Forex at 0.008%. You have stocks at 0.12%. Other stocks around 0.2%. 0.32%, and the more riskier you get in the stocks, which are like your more volatile stocks, these are going to be in the tier 3, and then the least volatile are going to be like the QQQ, Google, etc. And then of course you have ETFs, commodities, and so on. So if you remember, the GNS token is earning the revenue on the platform. So 40% of the fees from market orders and 15% of the fees from limit orders are given to the GNS stakers. So being a GNS staker will earn rewards in DAI. And if you have the NFT, this will also boost this. So there is no locking mechanism when you're staking this. And a lot of people seem to be happy with staking the GNS token. As you can see, based on these stats, most of the GNS token is staked. And at a current 77% staking ratio, and this is steadily climbing. Remember, this just deployed on Arbitrum as well, hence why the volume is going nuts and ham. And just taking a look at the stats and data, it's basically up only, with older traders continuing to use the platform as well as new traders coming in, and of course the profit and loss going down. The profit and loss going down is actually a good thing for the protocol itself because that means it's generating some revenue. This is also a quick snapshot of the GNS token, and you can see based on price, inflation, the market cap, the GDAI balances, Polygon versus Arbitrum, and so on. As you can see, within a matter of weeks, Arbitrum already surpassed Polygon, and the volume is nuts and ham. And it creates that reflexive flywheel with higher APRs. This also increases more people to deposit on Arbitrum, and so on. Anyways, guys, thanks for tuning in. I hope you guys enjoyed this video. If you guys did, leave a comment. Tell me what you guys think of Gains Network. And if you guys want to try out Gains Network and play around with the platform, there's a link in the description below so you guys can check it out. Let's go ahead and hit you guys with that wisdom one-liner. Proverbs chapter 10 verses 12. Hatred stirs up conflict, but love covers over all wrongs. That's so true, man. Be good, be righteous, love each other. Peace.